Well, I have updates now on the slow rollout of the national lockdown of the United States that likely is coming in order to try and stem the tide of the coronavirus, of the Wu flu, as we call it on this channel. Of course, as I predicted, on Monday, I think it was, that we were going to expect to see yesterday a spike in equity prices in the stock market, a bit of a bump. It was a pretty small bump relative to the moves that we've been having. It was only like maybe like a 5 or 6% day, but an update nonetheless. And today, so far, we're having a much worse down day, which is somewhat in line with what I expected. We are well below that 2450 level that I've been watching. We are under 2400 last I checked. In fact, we were briefly just a few minutes ago below 2300, although that was just a little bit of a blip. So, who knows if we'll close below 2300, but we're very close to the 2300 level now, which is below, very importantly, the intraday lows of December 2018. It's a very big number, because if we get below that level, if all of a sudden, December 2018 lows, becomes resistance, and that becomes the ceiling for the price of stocks, not the floor, because a lot of people were hoping that this would be a floor. Well, then we're going to continue to see prices falling further, and that again would be what I'm expecting. That is my base case, because if we look at just at other recessions, what mean reversion means, because that's what you have in stock prices when there's a recession or something to trigger a de-risk event. You have mean reversion, and I would expect market cap to GDP to end up somewhere in the 50% to 75% range. In 2001, we had stocks revert to 75% market cap to GDP. In 2008, they reverted to 50% market cap to GDP. Throughout the 80s and 90s, 50% market cap to GDP was pretty much the level that the stocks always maintained. And it's only been in this, I guess, post-millennial era that we've seen massive leaps above that. And of course, I'm not really looking at data before the 80s, because the 1980s is when the modern financial system in America came into being. That's really, that's the era we're living in. So I don't think it's that relevant to look at things before the 70s, unless you're getting into really extreme scenarios, which I guess you could argue, we might be in an extreme scenario that could break, the financial system we've had since the 80s, since Alan Greenspan, essentially. And that's something that I think is probably going to happen, as a result of this depression. And I think it's pretty safe, to call it a depression at this point. That's what a lot of people are talking about. Even the Treasury Secretary is talking about the possibility of 20% unemployment, because we have such a massive service economy. That all the jobs that we added back after 2008, the jobs that were created were largely waiters and bartenders. And if you're closing the bars and restaurants, that is like 40% of our economy, I think he said. So let's say half those people lose their jobs. You have 20% unemployment. And that's why they're trying to work so hastily to get this helicopter money out into the American economy, because literally, nobody is going to be able to pay their bills now. We have a nation living paycheck to paycheck, whether you're a corporation or an individual. Nobody has savings. We were told economically that savings are a bad thing. Nobody saved any money. Everyone just took out massive amounts of debt. Everyone has very big bills to pay every month. And so if there's, even the slightest interruption in their income, everything collapses in the whole country. And so the idea now is that the Federal Reserve is just going to print money and pay everyone's bills. And as I've said before, you can't deal with the supply side shock with a demand side solution. Printing more money when you have less production, it doesn't make production go up. It doesn't put people back to work. Your Keynesian fiscal stimulus isn't going to solve this recession at all. It can't bring people out. The nature of it is very different. All that you can do by printing money is on paper paying people's bills. You can pay the mortgages. You can pay rent, but what you can't do really is create more food. You can't deliver that food. You can't make things safe enough to where we can reopen all the restaurants and bars. You can't reopen the beaches just by printing money. And so what the government's response here, what they're trying to do is they understand that there's going to be some period of time where they're, unlike in other recessions, to where there is a material barrier to production. There is, it's physically impossible for the economy to maintain itself at the levels at which it was before this crisis. You can't just try and get people restarted back to work. So what you have to do, in their mind, is stop in the interim. While the economy is on pause, you have to stop everything from breaking. You have to stop the financial system from collapsing. You have to stop people from going bankrupt and from, defaulting on their loans. And so the first step to that today was, the FHA and Fannie and Freddie are going to stop all, foreclosures. For now. So essentially, if you can't pay your mortgage and you have a government loan, you're okay. You can go ahead and not pay your mortgage for now. And, I'm sure that that'll move to the other sector, to the private sector pretty soon, that they're going to impose it on the banks, probably as a part of their bailout, that they can't foreclose on people. And so what you're going to see is that, the idea with that is that if people don't lose their houses and people can't, you don't have all these foreclosures coming onto the market, well then, housing prices won't fall. So those of us who saw the housing market bubble and have been patiently waiting for prices to come down will not be able to afford a house, even though nobody really can afford a house right now. That's why you have so many renters. Now, we've also got bad news if you're a landlord, because like we've seen everywhere else, probably in this country you'll get to the point to where you can't collect rent anymore and where you can't evict people. Local governments, I think in California now, have just stopped the proceedings, and because of course eviction is a court function. They just closed the eviction court so that nobody can evict any of their tenants. They're doing the same with foreclosure, and of course you can't suspend evictions without also suspending foreclosures, because what happens is that if a landlord can't evict a tenant who won't pay, well then the landlord's going to default on their mortgage and be foreclosed on. So those two things go hand in hand. But just to clarify, so far that's limited to the federal government's own properties and mortgages and things that they own and have direct control over. So it's not a direct market intervention yet, but I'm just saying it'll probably get to that point very quickly. You'll see Congress pass something along like those lines, which they didn't do in 2008 when we had a housing crisis. Just so you understand how extreme the measures are in this case. Back then, when people couldn't pay their mortgages, people defaulted, because that's what happens in a market. If you can't pay your bills, you default on your loans. But that doesn't seem to be anyone's intention here. It seems like we're going full modern monetary theory and trying to print our way out of everything. Everyone's bills are going to be paid for now with printed money. And so keep in mind, this is completely unprecedented. This has never been done before in human history, aside from a couple of examples where things did not go well at all. So when I say it's never been done before in human history, I mean that it's never succeeded. Real modern monetary theory has never been tried, they might say. But in the Weimar Republic, Zimbabwe, and Venezuela, they tried this. They tried, hey, we got to a point to where we can't pay our bills. Nobody in the country can pay our bills. So to keep our economy from collapsing, we're going to pay for our bills by printing money. And in all three cases, that led to a total collapse. Not a financial collapse, but a collapse in just society, because nothing could work. Money lost its function. And, again, people have been, crying that would happen to the dollar for years, and they've been wrong. And I think there are reasons why they were wrong. But, because they were thinking that when the Fed was printing money in the past for QE and stuff, that it would be for this sort of stuff. And it wasn't. It went to the big banks and stuff to bail them out. It went into the stock market. And so the inflation was extremely concentrated in certain sectors. But here, we're seeing openly that they're trying to just print money to pay for everything. They want to pay for mortgages by printing money. They want to pay rent by printing money. They want to pay for food by printing money. They want to pay, the bondholders for every corporation with printed money. Back in 2008, how many billions in QE did we have? I think it was 800 billion, and now the Fed just did 700 billion at first. We've got over $1 trillion in stimulus coming. We've got a lot more coming now. Something the markets aren't prepared for, though, that will make the situation even worse, is that the lockdown that I've been discussing is moving along. It's making progress. I've got a couple sources now, not to get too deep. It's not like I'm some major news journalist who has high-end sources, but people who would know these sorts of things, who work in the Florida government, will say this. I've heard that what the next thing that's coming down the pike is that they're going to close state borders here in Florida, and that the interstate at the borders are going to be shut. You're going to have roadblocks and nobody in, nobody out. Now, I assume that there's going to be some exception for essential travel, just like there is, today with, Trump and Trudeau shutting the border between the U.S. and Canada. There is exceptions for essential travel, so I'd imagine that food trucks and fuel trucks are still going to be able to cross the border. But if you're a person on vacation in Florida, you probably will not be able to get out of the state, which is unfortunate. I was hoping that this whole virus thing wouldn't be so bad in Florida because, everyone would be going home, rather than wanting to be stuck here during the outbreak. But I don't think that a lot of people have, I don't think that there's been a mass exodus from the state yet. But if there's enough notice before this goes into effect, if it does end up happening, and again, this is just what I'm hearing now, so it's basically a rumor, but I have it on a good word that this is being discussed at the highest levels. If there is enough notice, then hopefully people will get out of the state. But of course, the interstates are going to be backed up for miles. And when they go and close, the highway, I'd imagine that there's still going to be people stuck in traffic. Maybe what they'll do is that, hey, if you're waiting in line to get out and you're sitting on the highway, we'll close the border behind you. They'll set apart, a line, and they'll say, hey, everyone past this point can get out, and after that, you're screwed. You're stuck here. I just think that's going to create total panic. And if you have internal restrictions on travel within the United States, that's going to lead to a whole new kind of panic on Wall Street. Because, of course, as I've been discussing, as the government, people in the government, Cuomo and de Blasio, have been discussing on TV, a lockdown of New York City is certainly on the table and not far out of the question. Now, this morning, Cuomo shot it down, and people are a little optimistic about this because he said, "Oh, well, I wouldn't sign off on a lockdown of New York City." And the reason why he said that is because he thought it didn't go far enough. It's not that he thought it went too far. It's that he thought it didn't go far enough, because he said, well, if you lock down New York City, then what'll happen is people will just run out of the city and flood other areas, and they'll infect them, and it'll make the problem worse. And so what he was basically implying is that, well, you have to have a bigger lockdown. You have to lock down more than just New York City. I think what he's getting at is that you want a lockdown of the tri-state area, just like how he, before he was saying, hey, if I shut down bars and restaurants in New York, well, then people are just going to go to New Jersey. And then the next day, he announced, that New York, New Jersey, and Connecticut are all closing their bars and restaurants. And so it may be the point now to where New York City doesn't get shut down first. It might be New York State, New Jersey, and Connecticut all agreeing to go on total lockdown at once. And so at that point, I'd imagine that, we here in Florida will not be too far behind, but we should have at least a bit of a window there in between when that happens, because I think everyone agrees that New York, things are going down there worse than anywhere else, and that is where you're going to see everything go down. And even at the at the peak of this, there's going to be no worse place to be than New York City. So if you've got some last minute preparations to make, depending on where you live, you might want to make those now. Because Cuomo says that he thinks that this virus outbreak is not going to peak for another 45 days, and let's just say he's right. And I'm sure he's trying to be somewhat optimistic. Let's say he's right. That's a long time. And that's, that means that things are going to keep getting worse for another 45 days. And only then will things start to get a little better. It's not like this is going to be over in 45 days. If he's right, this should be over in 90 days, which even that I'm sure is very optimistic. But again, is just printing money going to be enough to sustain this whole economy in this country, this society, for 90 days? I don't think so. I think that on the other side, when you come out of this, after 90 days, there's not going to be much left. We're going to be a very different country. We are not, we may not be a single country. So one last bit about the stock market. I think a pivot point that we'll want to watch out for, and this might coincide with the bottom in the virus. As far as the virus panic goes and the whole crisis, you'll want to watch the level of the S&P at around 17 or 1800. I think it'll go that far because that is in line with mean reversion. As far as like what we saw in 2009, I believe that's about 60. That would be about at 60% market cap to GDP, which is where stocks went to in 2009. I'm not saying it can't go lower, but I think at that point the market will be looking for a lot of optimistic news, and it'll be poised to make a bounce. So we'll want to see what the virus news looks like then. But But of course, considering how different this crash is from what I was from the kind of crash that I or anybody else was anticipating, perhaps all those rules just get thrown out the window about technical levels and stuff like that, because this is just such a serious fundamental problem. Perhaps there is no bottom for the U.S. stock market. But then again, if you look at a place like Venezuela, their stocks have done great because they've had hyperinflation, and a lot of that's gone into stocks. Now, stocks are not going up fast enough to account for inflation, but stocks are still they've gone up, over the past few years. So, maybe the stock market is not going to be a good indicator moving forward if we do get down that road to helicopter money. But of course, if that's the case, then that means that the dollar is being completely devalued as a result of the helicopter money policy, and that's a totally different problem, which would also lead to a collapse of a different kind. The kind of collapse that you see in Venezuela or Zimbabwe or Germany. And I hope we don't get to that point. People have thankfully been wrong about that in the past, because it's a very, it's one of the worst things that can happen to a country. So with that said, if you gained anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe, because I do upload every day and I'd hate to have you miss one. So I'll see you folks back here tomorrow.